These days, cryptocurrencies and NFTs are on fire, and many investors are hoping to profit from its meteoric growth. As the value of cryptocurrencies and other digital assets has risen, artists, collectors, and speculators have flocked to the movement. Whether this represents the beginnings of a new long-term investment asset class or an unsustainable bubble about to burst. Expert traders have been speculating on Bitcoin for years, but if you're new to the market and want to get in on the action. Hey folks, welcome back to the channel, Finance Currency. In today's episode, we'll show you how to start investing in crypto and NFT. On that note, we'd really appreciate it if you drop a like button on this video, subscribe to the channel, and turn on the small bell icon right below the video to never miss out on new updates. With that being said, let's get started. First and foremost, if you want to invest in cryptocurrency or NFTs, you must have all of your financial affairs in order. Having an emergency fund, a manageable debt load, and ideally a well-diversified investment portfolio are all important components. Your cryptocurrency investments can help you diversify your portfolio while also potentially increasing your total returns. As you begin to invest in cryptocurrencies, keep these 5 other factors in mind. 1. Understand what you're investing in. Just like any other investment, you should know exactly what you're getting into. It's vital to read the prospectus and do extensive research on the companies before purchasing stocks. Plan to do the same for each cryptocurrency, as there are thousands of them, each within its own set of rules, and new ones are created every day. You must understand the investing rationale for each deal. Many cryptocurrencies are not backed by anything, such as tangible assets or cash flow. In the case of Bitcoin, for example, investors rely only on another party paying more for the asset than they did. In other words, unlike stocks where a company's profits can expand and drive returns for you, many crypto assets must rely on the market becoming more enthusiastic and positive in order for you to profit. In the same way, NFTs are bought and sold through a dedicated NFT marketplace, similar to Amazon or Etsy for digital goods. These marketplaces, similar to the exchange system for buying and selling cryptocurrencies and equities, can be used to acquire an NFT at a predetermined price or as a virtual auction. As a result, prices on NFTs listed for auction are unpredictable, fluctuating in value based on demand. The more the demand, the higher the price. So, before you invest, make sure you're aware of the potential gain and risk. It's possible that your financial investment will be worthless if it's not backed by an asset or cash flow. 2. Remember, the past is past. Many rookie investors make the error of extrapolating from the past to the future. Bitcoin was once just worth a few cents, but it's now worth thousands of dollars. The real question is, will that growth continue in the future, even if it's at such an incredible rate? Rather than what an asset has done in the past, investors are interested in what it will do in the future. What factors will have an impact on the future profits? The NFT market generated about $23 billion in trade activity in 2021. The key factors behind a record year for NFTs were significant trends such as randomly produced collectibles, the engagement of mainstream celebrities in the field, and the rise of play to earn. The most recent metaverse craze was the icing on the cake. 3. Don't forget about the volatility of these assets. Cryptocurrencies and NFTs have some of the most volatile pricing of any asset. They may be tossed out in a matter of seconds based on nothing more than a false rumor. This can be useful for experienced investors who can execute trades fast or who have a good grasp of the market's fundamentals. How is it trending and where it might go? It's a minefield for new investors who don't have these abilities, or the high-powered algorithms that direct these trades. Volatility is a game played by high-powered Wall Street traders who are competing with other wealthy investors. The volatility might quickly crush a novice investment. This is due to the fact that volatility frightens traders, especially newbies. Meanwhile, other traders may take advantage of the situation and buy on the cheap. In other words, whereas professional traders can buy low and sell high, naive investors might buy high and sell low. 4. Risk factor. You might control your risk while trading any asset on a short-term basis, and this is especially true with volatile assets like cryptocurrencies. As a beginner trader, you'll need to learn how to manage risk and build a strategy to help you avoid losing money. And this procedure differs from one person to the next. A long-term investor's risk management may simply consist of never selling regardless of price. The investor's long-term mindset permits him to continue with the investment. A short-term trader's risk management strategy can include establishing rigorous standards for when to sell, such as when an investment has declined 10%. The trader then follows the guideline to the letter, ensuring that a minor loss does not turn into a crippling loss later. New traders should consider setting aside a particular amount of trading capital and just spending a fraction of it at first. They'll still have money in the reverse to trade with if a position goes against them. The bottom line is that if you don't have any money, you can't trade. Keeping some money in reserve ensures that you'll always have a bankroll to trade with. Risk management is necessary, but it comes with an emotional cost. Selling a losing position stings, but it's something you'll have to do from time to time if you want to avoid much worse losses later. 5. Don't put more money into it than you can afford to lose. If you can't afford to lose at all, don't put your money into unstable assets like Bitcoin or even market-based assets like equities or ETFs. The money you'll need in the coming years, whether for a down payment on a house or a significant purchase, should be saved in safe accounts so it's available when you need it. And if you're seeking a guaranteed return, paying off debt is your best bet. Whatever interest rate you pay on the debt, you're certain to earn or save. There's no way you're going to get lost there. Although, keep in mind that digital assets may see a cooling trend at some point in the future, consider the risks and diversify your holdings by including cryptos and stocks of companies developing blockchain technology in your NFT portfolio. Furthermore, make sure that any exchange or broker you choose is secure. Even if you legally control the assets, someone must secure them, and their security must be strict. Some traders choose to invest in a crypto wallet to keep their coins offline and out of reach of hackers, and others if they don't believe their cryptocurrency is securely secured. A cryptocurrency brokerage is a company or individual that acts as a middleman to help people acquire and sell cryptocurrencies. An exchange is a web-based marketplace where buyers and sellers trade based on current market conditions. When purchasing cryptocurrencies, keep in mind that fees are an important factor to consider. For a trade of $10 or less, Coinbase, for example, charges 99 cents. The larger the trade, the higher the cost. For crypto trading, SoFi Active Invest costs up to 1.25%. Fees can be a flat rate per trade or a percentage of an account's 30-day trading volume. Examine costs based on the transaction sizes you intend to undertake to obtain an idea of how much you'll spend. As you learn more about NFTs and cryptocurrencies, be cautious and remember to diversify your investments to reduce the chance of a single asset derailing your wealth-building efforts. However, the best advice for beginners who want to start trading cryptocurrency is to start small and only invest money that you can afford to lose. With this, we've come to an end. Thank you for watching the video. The content in this video is for educational purposes only and hence should not be considered as financial advice. We all know that the crypto market is highly volatile, so all the financial decisions should be made after doing your wide spectrum research. Also, make sure that you like this video, comment down your thoughts regarding it, and also don't forget to subscribe to our channel to stay updated.